because we know Bitcoin is the only asset in the world, right, where the supply does not respond to an increase in demand. And that's why, we've had, and, I agree, we're going to have these parabolic moves and maybe some that will blow both of our minds away. But at the same time, Bitcoin's percentage of the overall crypto market has declined. So there is capital, right, that is being siphoned away. Like people are saying, I'll invest X in crypto. They're buying some Ethereum, they're buying some Solana. So what are your thoughts on that? Like, is the scarcity being diluted by other cryptos and they taking share from Bitcoin demand?
Yeah, I don't think so. I think that there's two markets here. There's a crypto market, which is really a tech VC market. And that's the ETH, Solana, Cardano, Binance, Smart Chain, fill in the blank. What their best hope is that one of them or some of them can dematerialize the banking and the exchange segment of the economy. Like they dematerialize JP Morgan or NASDAQ or New York Stock Exchange. And it's looking increasingly like Binance and Coinbase are going to are the competitor to NASDAQ and New York Stock Exchange, more so than the DeFis, in my opinion. But the crypto sector is all about dematerializing applications and banking, and it's a fintech play. And on the other end, Bitcoin and digital property is about dematerializing gold, commodities, and demonetizing property and buildings and land and real estate and ultimately money. And if you want to look at the two of them, right? If you want to demonetize property, you want something which is industrial strength and will last forever, and that's a proof of work network. You want real money with real energy will provide you real security. And the closest competitor to that is Bitcoin Cash, Brett, and it's 1% of Bitcoin going to zero. I mean, it's a disastrous joke, right? Ethereum is sitting in the middle because they're trying to migrate from proof of work to proof of stake, but clearly their future is in proof of stake. And proof of stake is a necessary technology to try to get the speed and the performance to be an exchange. That's why they're doing it. But, that entire, that addressable market is the next generation fintech market. And you will compete with JP Morgan and Square and PayPal and Coinbase and Binance and Citadel, high-speed trading, and they'll all compete with each other. And Solana will compete with Cardano, will compete with Binance Smart Chain, will compete with ETH. And so ultimately, you've got execution risk, you've got competition risk, you've got all manner of regulatory risk. Right? I mean, you want me to catalog how many different ways can the thing fail? Like, would you move to a country that told you they were going to disband their military and their law enforcement next year, but it should work out well? Because that's the Ethereum value proposition right now, right? You don't know how the proof of stake thing is going to work. You don't know. If you read the president's working committee report this week, you know that there's active review of all the DeFi protocols, at the administration level. And the writing is on the wall. It's pretty clear. Most of them are securities. Others are commodities and derivatives. It's likely that the regulators are going to apply regulatory oversight to the DeFi exchanges, to all the exchanges that handle all those tokens, and to all the developer groups that actually handle them. So